Hello everyone. We are starting with question number 27 now. In this video, I feel we'll be able to do this one only and a very important question. Now, this type of question is actually expected in our board examination. Let's look at it. The given below is the balance sheet of A and B who are carrying on partnership business on 31/12/2016. A and B share profits and losses in the ratio of 2:1. So our old ratio is 2:1. Let's look at the liability balance sheet of A and B on 31st March 2016. Now see all of you, there is a slight mistake. It should be either March, okay, because the balance sheet is 31st March 2016. Okay, yeah, let's look at the balance sheet. So bills payable, creditors, outstanding is outstanding expense, capital of A and B. Cash in hand, cash at bank, sundry debtors, stock, plant and building. Next thing, C is admitted as a partner on the date of balance sheet on the following terms. C will bring rupees 1 lakh as his capital and 60,000 as his share for 1/4 share in profit. Plant is to be appreciated to 1,20,000. So see, plant is 1 lakh. So right now, so 20,000 is the profit, revaluation profit, 20,000. So on credit side, okay. Then and the value of building is to be appreciated by 10%. So building 1,50,000, 10% is 15,000. That too on the credit side of the revaluation. Stock is found overvalued by 4,000. So stock is extra written. Okay, so we have to reduce it. An asset is going down. That's a loss. Okay. A provision for bad and doubtful debt is to be created at 5% on debtors, and creditors were unrecorded to the extent of 1,000. So these three will go on the debit side and these two will go on the credit side. Pass the necessary journal entries and prepare revaluation account, partners capital account and show the balance sheet after the admission of C. So students, first what I will do, instead of passing the journal entries, I will show you how to make the ledger accounts. And if the ledger accounts are ready, then journal entries become really simple. Okay, so let's do it. Yeah. Numerical question number 27. Okay, so we need three type of formats ready whenever ledger accounts are required: revaluation account, partners capital and the revised balance sheet format. So first thing is revaluation account. Let's make little small accounts. Revaluation account. We don't need a big revaluation account because 2, 3 entries that side, 2 and 4, 5 entries this side. Okay, then we need a partner's capital account. I hope this is visible to you all, because I would want to show everything on one page so that it becomes easy for us to understand. I'll be using the entire space for partners capital. Now, what are the name of the partners? A, B, and C. Good names. And see, I'm just making a bifurcation here, and I'm going to make the balance sheet. So this balance sheet is after admission. Okay, so everything is displayed on one single screen, so it will be easier for us how the entire flow of the question will go. So whenever we have to do this type of question, I suggest you all to start doing like a final accounts question. In final accounts question, what we used to have, we used to read the entire question. Think of this as a trial balance. Okay. Now everything recorded in the old balance sheet will be recorded only once. Okay. So let's start posting these. Bills payable 10,000, creditors 58,000, and there was an adjustment there, outstanding expense. So bills payable. Oh, not here. It's not revaluation in the balance sheet. Because there is no adjustment here, and was 10,000. Okay. Next thing was creditors, but there was an adjustment. So I'm writing 58,000 in the inner column. And then was outstanding expense. I don't think so there was any adjustment there. Okay, so these three things on the liability side we have already recorded. Yes. Now these capitals, these are the opening capitals, so will be written on the capitals of the partners respective, 1,80,000 and 1,50,000. Now, after this, okay, let's move on to the asset side. We remember there were adjustment in the assets like in cash also, okay, cash, bank, sundry debtors. So, cash no adjustment, bank the new partner brings in money, so there will be some adjustment, sundry debtors adjustment, 10, 40, 60. Okay. What else? Stock, plant, building, adjustment. How much was plant? Stock, I remember 40. Plant 1 lakh and building 1,50,000. Now we have copied our entire balance sheet at one place only, okay, or the other. Now let's look, our balance sheet is done. We don't have to come back to this balance sheet now. What we need to do is we need to do the adjustments. Now do remember, these are adjustments, and if they are adjustments, they'll have two effects. Okay, if you follow these steps, you will never do it in wrong. So C is admitted as a partner on the balance sheet date on the following terms. C will bring rupees 1 lakh as his capital and 60,000 for his share of goodwill for 1/4 share in the profits. Okay, so 1 lakh and 60,000 C is bringing in money. So by bank, how much? 1 lakh is his capital. So 1 lakh we have written in the capital. Now goodwill, what will happen? The bank will come. So amount is coming in bank. So plus 1 lakh plus 60,000. Okay, he brings in 60,000 also. So bank 40 plus 1 lakh plus 60 is 2 lakhs. Yes. Okay, and this 60,000 will be given to whom? To the sacrificing partners. Now let's find out the sacrificing ratio. See, is there any information about how he is taking the share? 1/4? No, nowhere it is mentioned. So what will happen? The old ratio 2:1 becomes the sacrificing ratio. Yeah. So we know the sacrificing ratio is the old ratio, that is 2:3. So this is 60,000 by premium for goodwill. Okay, this is the 60,000 will go in 40 and 20. Okay, what is this? The premium for goodwill. Don't write by bank here 1 lakh 60 because this is partner's capital account. 1 lakh 60 is not capital, just 1 lakh is the capital. That rest 60 is what? It's the premium for goodwill, and the premium for goodwill, if we are making partner's capital account, will directly go to the sacrificing partners in the sacrificing ratio. So this is the S in the sacrificing ratio of 2:1. Okay, so again the two entries of 1 lakh is gone, 60 and 60 entry. Assets shows a debit effect, and this partner's capital account on the credit side shows a credit effect of the entries. Okay, so this is done. Let's look at the new entry. Plant is to be appreciated to 1,20,000 and building to by 10%. So plant they are saying should be 1,20,000. Okay, yeah, I'll write 2 lakh also with this. Now, why this 1,20,000? Because there is a increase. Why? Because it's revaluation. How much increase? 20,000 increase is there, and building also increase by revaluation of 10%. So 15,000. Yeah. So this becomes 1,65,000. Okay, and the revaluation, this showed the plus on the asset side is the debit effect. So by first is plant, not plant, shows 20,000 profit, and by what is this? Building is showing 15,000 as the profit. So debit and credit, both the effects are done. Let's look at the other revaluation entries. Stock has to be reduced by 4,000. provision 5% on debtors, and creditors unrecorded liability to the extent of 1000. Okay, stock 4000 overvalue, so minus revaluation to the extent of 4000. So this gives me 36,000. On the creditor, and like first was debtors minus PFDD we can write down, yes. It's a new liability coming in. Provision for doubtful debts, 5% of 60,000 becomes 3,000. So this comes to 57,000. Okay, so a new liability is coming in and stock, and there was something related to creditor. What was it? Stock over provision, creditors 1000. Okay. Now, this is done. Let's put on the revaluation. First of all, we did of stock. So, stock going down, asset going down is a loss for us. To stock 4000 to provision for doubtful debts 3000. A new liability coming in is also a loss, and to creditors increasing is also a loss for us. And all these are recorded on the debit and the credit side both. What else is remaining? Yeah, nothing. We have done all the entries. Now we just need to balance the accounts. So first of all, let's balance our revaluation account. 35,000. I hope this is 4 and 4 8. So 35 minus 8 is 27,000 is the balance, and that's our profit on revaluation. 35. And this profit belongs to the old partners to profit on revaluation transferred to partners account. Okay, and who A and B will get the share, because these revaluation will be borne by them. So this 27,000 will be distributed in their old ratio, which is given as 2:1. So 2 by 3, 1 by 3, that gives us 18,000, and this gives us 9,000. So this profit on this side will go to their credit side. By account, by revaluation account, this will be 18 for him, and this will be 9 for him. Okay. Now this is also done. So if everything is done, let's total the partners' capital accounts also, and then we'll go to our balance sheet. So let's see. This one is quite simple to total. 1 lakh. Okay, nothing here. So to make it 1 lakh, what we need to do? We need to write down to balance, carry down. There is no drawing, there is no interest on drawing. So 1 lakh is the balancing figure. For him, the balancing is 179. Here also. And this becomes our balancing figure. And finally here 180, 220, 238. And now this figure will go to our liabilities. A, 2,38,000. B, is 1,79,000, and C is 1 lakh. So let's do the total. 2 plus 3 plus 1, 4, 4, 5 lakh, 8, 5 lakh, 17. And let's do the total and see whether our balance sheet is coming equal or not. So 5 lakh 17 this side, 5 lakh 17, 519, okay, 519, 529, 529 plus 9, 538, 538 plus 50, 588. 210, 267, 297, 3 lakh 3, 4 lakh 3, 4 lakh 23, 5 lakh 23, 5 lakh 28, 5 lakh 88. Yes, the balance sheet is telling at 588. Okay, this is how the entire accounts needs to be done. I'll just show you once. Okay. Yeah. But still the question is not yet over. What is remaining are the journal entries. So, but I told you, if the accounts are ready, doing the journal entries are actually very simple, and we just need to follow the chronological order. Now, what will happen, because we have already calculated the profits on revaluation and the everything, so we just have to write it down. Let's do it. Let's do the journal entries. Okay, first journal entry will be of the new partner coming in. Okay, who's the new partner? C, and he's bringing in money on. So, bank account debit. Remember, we did it in bank account to C's capital account to premium for goodwill. C's totally he bought rupees 1,60,000. Out of that, 1 lakh was for his capital and 60 was for the goodwill. This premium for goodwill was distributed amongst A and B. Okay, this 60,000 was distributed in the sacrificing ratio, which was the old ratio, which came to 40 and 20. Okay, what is this? This is the sacrificing ratio of 2:1. Then third thing that we had to do was to revalue the assets and liabilities. So plant and building were going up. So plant account debit, building account debit. I guess plant was with 20,000, building was with 15,000. So to revaluation account 35,000. Okay, I'm doing the rest of the entries here. Fourth entry comes to the revaluation will be debited. The losses. Okay, losses happened in stock to the extent of 4,000. To new provision for doubtful debt coming in to the extent of 3,000. To creditors to the extent of 1,000, so 8,000. We can see credit 35, debit 8, the account is not equal, so we need to equal it by, see, debit is less, so we need to debit it more. Account debit the balancing figure of 27,000, okay, and this profit will go to A's capital, to B's capital, to the extent of 18,000 and 9,000. What is this? This is old ratio of 2:1. Okay. Now this is also done. Revaluation profit is also done. So the journal entries are actually done. See, such a simple steps for journal entries. I'll just do this for bifurcation. And the journal entries are over. I'll just show you our, I hope you have copied everything down. I'll just, yeah. Now this should be, everything should be visible. Okay, do remember, first thing first, you have to make the formats ready. Okay, then this is second, and this is the balance sheet is the third thing that you have to solve in this order. You have to balance, and then the journal entries. Journal entries are quite simple. Okay, with this we are done with this question. Thank you for watching.